Thank you very much, Whip. Thanks everyone for turning up today. Yes, the last 3 years at Westgold has been exciting, and hopefully we can give you a snapshot into where it's going now. Westgold's value proposition, it's much simpler to explain this story now. It used to be quite complicated, now very simple story to understand. Last year we produced 326,000 ounces. We currently got a 16 million ounce resource, 3.5 million ounces of reserve. 4 processing hubs all across Western Australia. Group milling capacity of nearly 6 million tonnes per annum, and the business is starting to get to a point where we're starting to become mill constrained. The focus for this year in what you will see in the business is shifting the grade to our mills up. Operational efficiency is really the key change which we're focused on this year, and with that change we expect our cash flow to increase. Organic growth focus is where we're at, because we're 12 months on now post the merger with Karora, and now the business has scale. Won't focus on this slide too much, other than I've just touched on the reserve and resource position. And for the first 7 or 8 years of Westgold's operation, we didn't drill. We certainly didn't replace the resources and reserves that we were depleting. So it's really heartening now to see that the business as it sits today on last year's run rate has effectively a 10-year production profile. Our share price in that graph there only goes back to July 24, is quite erratic, and I'll speak to the reasons of why it has been erratic and what we're doing to change that. As I said, the business quite simple to explain now. We really speak about 2 business units, really being the Murchison, the business which Westgold had always had, and the Southern Goldfields, which were the Karora assets which we acquired via merger last year. In the north, 3 processing hubs of circa 4 million tonnes of capacity, and people shouldn't underestimate the strategic value of having more than 1 processing plant. I mean, Luke spoke to his thematic in the Ora Banda story, and for us, having 4 processing plants gives us a different risk profile than many of our peers. FY25 production from the Murchison, circa 200,000 ounces, and that was a difficult year in the Murchison, and we see that production growing into FY26. In the south, the Southern Goldfields, we started off with 2 processing hubs. We sold 1 smaller processing plant, the Lakewood plant, to BC8, the Black Cats, last year, which materially simplified our Southern Goldfields business. 1 processing hub, the Higginsville 1.6 million tonne per annum plant, currently in study with a view to an expansion to 2.6 to 3 million tonnes. FY25 was challenging but transformational for all of the Westgold team who lived through last year. I mean, we took a big swing at a company effectively the same size of us and doubled the scale of the business. In FY26, Westgold has scale. We started last year, or finished last year, at 326,000 ounces, guiding towards a midpoint of around 365,000 ounces this year. And in summary, what did we do in FY25? We closed the Karora transaction, which was transformational for Westgold. It effectively gave us 2 operating footprints across 2 of Western Australia's most productive goldfields, and we really our appeal of the Karora assets was the Beta Hunt underground. Inside Beta Hunt, we were taken by what the potential scale of the Fletcher Zone was. I'll talk more about Beta Hunt, but Beta Hunt is effectively a 58-year-old mine which has only been mined for gold for the last handful. We knew what we were buying when we bought Beta Hunt. We could see a mine which had a fantastic ore body. It had already been mined for 50 years, but had significant challenges around a mine infrastructure. Nothing wrong with the ore body. All the problems we saw were engineering problems that could be fixed. In the last 12 months, we've addressed a lot of those, and I'll speak to those fixes later in the deck. Going back north, the Bluebird South Junction underground is a mine we started 3 years ago within 600 metres of our Bluebird processing plant in Meekatharra, and it keeps getting bigger. Why? Because we've been drilling it like demons for 3 years, and we still don't know how big this mine is, but single-handedly Westgold's making Meekatharra great again. During the last 12 months, we finished the 18-month development of a high-grade mine called Great Fingal at Kew. Great Fingal now has been handed over to Barminco. We brought a contractor in to mine this thing, and we handed the keys of that mine to Barminco in the first week of September. if you can draw anything about the graph on the right-hand side, it really shows the erratic nature or the performance of our share price. And that has been absolutely linked to inconsistent operational delivery. I'd like to think we can see an inflection point in our stock, which is only a few months ago. And again, we do trade at a discount to our peers on every metric, and the reasons for that are inconsistent operational delivery. As our operational delivery becomes more consistent, our financial outputs will become more consistent, and the trading gap and value gap between us and our peers will close. Grade key to enhancing free cash flow. We finished the financial year with $364 million in cash and bullion, and the focus for this year is really about shifting what is a 2-gram business towards a 3-gram business. The key points on this slide, really, which speak to our 4 processing hubs, is a historic or a previous reliance on stockpiles to fill our mill capacity. During FY26, in every one of these processing hubs, our reliance on stockpiles is diminishing as our mines are starting to generate higher outputs. This shift from being mine constrained to mill constrained will generate greater free cash from this business. Consistent operational delivery equals more free cash in FY26. Whether it's the Murchison or the Southern Goldfields, there is a lot of internal growth within Westgold now, which we're funded and or advanced in executing. Bluebird South Junction is the engine room for our northern business. Once upon a time, Big Bell, which we won't speak to in this presentation, carried the northern business sole-handedly. Now, Bluebird South Junction is key to the Murchison business. Great Fingal is, as I said, started in September, will inject grade into the northern business we've never seen. Great Fingal will start, we forecast, will be 20 to 40,000 tonnes a month at 4 grams per tonne. Starlight, a tiny little mine in the northern part of the Murchison, started in 1998, just keeps getting better with age. This mine, which is a single mine in a single mill, generating 60 to 70,000 ounces per annum, is a compelling story of, we tried to close it 3 years ago, we slowed it down, we put drills into this ore body, now it has a 7-year mine life and keeps getting longer. Across the Murchison during FY26, we can see our mine grades lift, and with that comes increased production, lower costs and more cash flow. Pivoting to the Southern Goldfields, the target for FY26 is to get Beta Hunt to north of 2 million tonnes per annum without the Fletcher Zone. The Fletcher Zone was a new target which had been drilled lightly since 2006. The previous owners had drilled 19,000 metres into this target called Fletcher within the Beta Hunt system since 2016. We put 22,000 metres of drilling into this target within 8 months and added 2.3 million ounces of resource to this mine. The focus going forward now is we have this issue of we've now got a mine which can generate more than enough ore than we can process. Hence, debottlenecking and expansion of our Higginsville mill from somewhere between 1.6 to 3 million tonnes per annum. That feasibility study is running now, and the capital cost of that will be defined by the end of the year. The business in the Southern Goldfields, what we see now is a very well-balanced business between mine and mill, but overall our outputs in the Southern Goldfields are lifting. Across the portfolio, the key to our transformation over the last few years, other than a different approach, has really been drilling. Last year we spent $42 million of drilling across our existing package. This year, $50 million is the target. Quite happy to give our exploration team more money to drill, and there is a litany of targets which are screaming out to be drilled. Where we are in the business now, we are asset rich, and we'll go through a phase of asset divestment during the next 12 months. There are many assets within the portfolio which we get no value for in our share price, and as we've shown the market, for things that don't fit or are under scale or high cost, quite happy to move them on and give someone else a go. I just want to briefly touch on a couple of the key assets within the business, starting with the Murchison. Starlight and Fortnum, this little mine just keeps giving. I mean, this mine has been under-drilled from the go-get, and it's moving from sort of 2.5 grams per tonne to 3 grams per tonne. Currently have 4 drill rigs sitting inside this system, continuing to drill new targets both above and below the existing workings, and this mine is flying. It's outperformed last year, continues to outperform, and full credit to the team that's been operating this little mine. In some sense, this is a template for what good looks like at Westgold. A well-balanced mine with a mill and a focused team who are committed to drilling. The star of the show in the Merchant is rapidly becoming Bluebird South Junction, and really the market doesn't understand how good this asset is yet, and that provides an opportunity for many in this room. We started this mine 3 years ago as a small underground mine doing around 250,000 tonnes per annum, and we started to drill. It rapidly became a mine of a single decline doing 250 then to 500,000 tonnes. Currently, from 2 mining zones, which we call Bluebird and South Junction, this mine will do is on track to do 1 to 1.2 million tonnes per annum run rate by the end of this year. We keep drilling this asset. It is within 600 metres of our largest processing plant, and finally I think we've cracked the code of how to do this properly. Starting to see consistent grades come out of this mine, moving it towards 1 to 1.2 million tonnes by the end of the financial year at grades of around 3 grams. The missing magic in Meekatharra and that processing plant at Bluebird has been fed on hard underground ore, and that achieves a run rate of between 1.6 and 1.8 million tonnes per annum. So the secret sauce we've missed around Meekatharra was oxide ore. Happy to say that we did a corporate deal with a small company called New Murchison late last year and helped a junior explorer become a producer. Our real attraction to the assets that New Murchison has was the Crown Prince open pit, which is a smallish high-grade oxide pit. First ore from Crown Prince was delivered to Meekatharra last week and was started to go through our mill. First grade, and the grade of the first parcel was 4 grams. 30 to 50,000 tonnes a month of high-grade oxide into our Bluebird mill is transformational. We'll lift the throughput, grade and recovery of that asset, and means we'll have the ability to stop milling low-grade material, which we're hauling from all over the countryside, to fill this capacity. Our expectation at Meekatharra is to make Bluebird South Junction underpin the full production at Bluebird, supplemented with high-grade oxide from Crown Prince. Great Fingal, again a 4 gram underground, which again started operations with Barminco in September, and the handover to Barminco after Westgold developing the decline here for 18 months has gone really well. Our real attraction to this asset is grade. 2 historic high-grade mines, Great Golden Crown and Great Fingal, significantly under-drilled. And now that we're actually inside the ore body and our decline is under the old workings, we're starting to identify new targets within the existing mine. We've not told the story very well about Great Fingal, but we certainly are starting to drill this, and first contribution of grade from Great Fingal will be seen in Q2. The Southern Goldfields. Beta Hunt doing it right. What am I really trying to say there? I mean, Beta Hunt was the whole rationale for the Karora transaction, and I must say, zero buyer's remorse about this asset. What this graph is trying to show is that this single mine, which has really been mining from 2 mining fronts, has achieved up to 400,000 tonnes of output for a quarter under our ownership. What's held this mine back? It's not the ore body, that's for sure. It's about the mine infrastructure, which was aged and under scale for the scale of output it was doing. Happy to say the things which are holding Beta Hunt back are largely been corrected in the last 12 months. Clean water, fresh air and the trucking fleet there have all been upgraded, and we're starting to see the benefits of these productivity enhancers in the mine outputs. Fletcher, which really I remember doing the DD on these assets and looking at the drilling that Karora had done in Fletcher and thought, wow, just how big could this thing be? Our original expectation in terms of what the Fletcher zone would be a maiden resource of around 1 million ounces. We delivered 2.3 million ounces, and this is half the strike of this system. So our original idea about Fletcher was that, looking at this graph, that within the Western Flanks and A zone, those 2 existing mining fronts could do 2 million tonnes per annum, and they will be doing that by the end of this year. Fletcher, we originally thought would be around 300,000 tonnes of production. It's not that, it's much larger, and the issue is we just don't know how big it can be. So we're continuing to drill out Fletcher. We've currently got 7 rigs within this system, 2 in Fletcher, 1 in Mason, and the balance in A Zone and Western Flanks, but we're not going to rush Fletcher into production. This by itself looks like a standalone mine which could do as much output as A Zone and Western Flanks. Let me just dwell on that. 2 million tonnes from A Zone and Western Flanks, potentially the same level of production out of the Fletcher Zone. What's ahead? FY25 was challenging, WIP, absolutely. We stubbed our toe, and in some sense, even though it was a big year for Westgold, the business had never produced more than, I think, previous year, 270,000 ounces. Sounds about right, 235. Doing 326 in some sense, we'd targeted a lot more. This year we're guiding towards 345 to 385 at a cost between 2,600 and 2,900, and we're quietly confident about being able to achieve that. We've learned a lot about guidance and about setting over optimistic targets in Westgold over the last few years, so certainly we've got a very solid plan for FY26. What the business has never done is never shown the market an outlook longer than 12 months. I'm happy to say that we'll bring a multi-year outlook to the market in the next few weeks. Shareholder returns, hope things which I'm sure many people in this room are interested in, is something we're getting better at. We've continued to pay dividends to our shareholders. We did 3 times what our dividend policy said for last year, and then we've also announced a share buyback. These are really pointing to an evolution in our capital management within the business, and certainly an evolution in the way that we think about shareholder returns. Getting close to the end of the presentation now, and the plan is really clear for us. The Westgold team is focused on consistent operational delivery. Removing some of the variability out of our operational performance will translate into stronger financial outputs for this business, and it will continue to build cash. In the Murchison, Bluebird South Junction is in a very good place, and we'll start to see the benefits of a redesigned mine plan in Q1, more evident in Q2. Great Fingall is started now. We'll start to see that grade hit our process plants in the second half of this year. Starlight continues to grow and output perform, but across the board in the Murchison milled grades are lifting. In the Southern Goldfields, again, productivity is starting to lift, more consistent outputs from Beta Hunt. Fletcher is growing, and we're testing, we've got drills into the Mason target now, which Mason is the extension of Fletcher. We will get to a financial investment decision on the Higginsville expansion by the end of the year, and that will take our processing platform from 1.6 to somewhere between 2.6 and 3. Overall, our Southern Goldfields business, in my mind, is further ahead than I thought it would be 12 months on. And across the portfolio, the real issue is a business that's now shifting from being mine constrained, not generating enough mine output, to one where we're mill constrained. Positively, in front of all of our processing plants now we have stockpiles. This is a first for Westgold and allows the processing team to optimise those platforms for higher output. We'll also go through a phase of divestment of non-core assets. Really, WIP, that's the story, that's the tale of the tape. We're building something far bigger here than what you can see on the paper, and we're just going to go about it quietly, get a few runs on the board, and with that, the gap in our valuation to our peers will close. Thanks for your time.